All right. So today we're going to talk about this is a week 7, so it's moving right along. We're going to talk about some insurance type things, and then we're also going to talk about the midterm. There will be a separate release of a just a quick video. That'll probably be 20 minutes or so, but half an hour of review for the midterm. But the midterm's going to be coming be next week. Not this week right now, but the week after, and it'll be on Blackboard. There's no proctor required. It does use the mechanization of Blackboard where it will automatically close out after the allotted time. So it's not open book because you wouldn't really have time. If you tried to do it as an open book test, it wouldn't end well because you would run out of time. But anyway, we'll talk more about that as we go. Auto and homeowners insurance. So the big picture with insurance is, the government, society, they don't necessarily care, how you care to live your life. I mean, if you want to have no insurance or be self-insured, that's fine. Sometimes it's actually the responsible thing to do. But if you're going to be interacting, obviously, with the public like you would in a vehicle or whatever, or if somebody's going to be holding a mortgage on your house, yeah, they're going to insist that you have insurance. So in auto insurance, all they're concerned with is liability. If you want to ruin your own car, that's on you, and not be reimbursed for it. But if but if you're going to have the liability insurance, you will. There's a legal requirement for you to have liability insurance, meaning that you're responsible for destructions of other property and harm. Now, again, you can get outside of the legal limits quite quickly in terms of dollar figures, but we'll talk more about that. Homeowners insurance as well. So, background on insurance. The concept is that not everybody's going to have a bad day on the same day. If everybody does, let's say something horrific, like the big fires in L.A., no insurance company can survive that. That's not great for insurance model. And we could talk about why those fires happened and whatever. But if that's going to be the norm kind of going forward based upon whatever you want to call it, warming of the climate, which could be due to, anyway, most of us can agree that it's warming regardless of what would cause that. And then the other thing is the forced management practices or those guys. I mean, yeah, you got to have water in the hydrants. You got to have whatever. So a big event like that takes out a lot of people. It's going to cause an insurance company to become insolvent. And this problem's been around for a long time, way before this fire situation. Floods have always been recognized as that. So private companies cannot issue flood insurance policies. They can be involved in the management of it, but the flood insurance program is actually a federal program because they're the only ones with the deep enough pockets to cover a lot of people at once. So for normal insurance, like auto policies or homeowners policies where a single home's damaged by wind or rain or a household fire type thing, internal electrical fire, that's perfectly makes sense for insurance because they'll probably, I don't know, in Alaska there'll probably be 3 or 4 fires today and 700,000 people paying insurance. And so those couple people that are having the bad day are vastly outnumbered by the people who everything was normal and the insurance company kept their premium. So it's a viable business model. Anyway, all right. So I hit on liability already. The amount you may require to pay for somebody else's damages. So there's different aspects to liability. There's just I don't know if it's a legal term, but basically bad luck. You took the necessary precautions, but you're in the wrong place at the wrong time. Then there's other types of liability where you're negligent. You would not want to hear that term if you're in court and you're found liable of something and you're also found negligent, like you just didn't care. You didn't take the proper procedures or proper precautions. there's limits, um, but yeah, if you're clearly, and again, not so much in Alaska, but lower 48, if you've got a swimming pool, you have absolutely no fence around it, and a small child wanders into it, it's not going to end well for you. I mean, they're going to say that you didn't take the proper procedures. And the same would be true if you've got, ladders and things like that buried under the snow, hazards that you should not have had, and somebody comes on your property for some reason. Again, that's liability, and that's negligent liability. It can even get worse. You can have some, despite your best efforts to raise a proper child, you could have, let's say the neighbors go out of town, your kid sponsors a huge party at the neighbor's house, and they're a minor, so they're under your care, and they do something pretty irresponsible. They trash the neighbor's house with some massive party. That's called vicarious liability, and it comes back to you. So, again, lots of different types of liability that go beyond insurance. But big picture is you want to try and maintain your existing level of wealth. You don't want to have some random event just put you in the poorhouse. Not to say that can't happen, and not to say especially most people end up in this situation with health care, because it can end up just draining, makes property damage look minimal. Managing the risk. So talked about that a little bit already. Risk is a part of life, really. You can avoid risk in terms of driving a car. Just don't. Just walk everywhere. Now, have you avoided all the risk? Most of it, but it's not going to be very pleasant for you. And oh, by the way, you can get hit as a pedestrian. So avoiding risk is probably not a viable option. Reducing risk, not being stupid, not getting all liquored up and driving around, or when you do, perhaps have a safer vehicle, and wear the seatbelts, have the airbags operational, all the rest of that. So we're talking ways to sort of mitigate it. In accepting risk, this is when it's just, the odds of this thing happening are reasonably, not just in your perspective, but to the reasonable person, are quite low. And, oh, by the way, maybe you're in a position, you've got the financial resources to back it up. So let's say you're the state of Alaska, for example, fairly wealthy in terms of resources. They could spend a ton of money on insurance premiums, paying into a private company, but they're actually so large that why not just be self-insured, which is what they do. And so, if you file a claim against the state of Alaska, they're going to pay it directly, and there's not an insurance company involved for most of those. So that might make more financial sense, because they're, in essence, working as an insurance company themselves, where they're spreading out the risk and don't have to do it. If you're somebody who's done quite well and you want to be self-insured, in most states you can post a bond. And it's a little involved, but you can legally operate a vehicle technically without insurance, because you're self-insured. If you say, I absolutely don't want to pay money to an insurance company, so I'm going to post a bond, I'm going to put up, some financial resources against this potential event, and then you could do it. And insuring against risk is getting somebody else basically to take that risk for you. Say, I would rather transfer this risk. I'm not going to, if I don't mitigate the risk, if I don't reduce the risk, my premiums are going to be astronomically high. So the insurance company is going to insist that you take those measures. But if you've taken reasonable measures for a price, that would be the premium, they're going to accept that risk. So, anyway, yep, always economic, managing risk. People do tend to, maybe drop insurance or let it lapse, but probably not the smartest thing to do. So different types of insurance, property, casualty, injury type stuff, life insurance, and health insurance. I'd love to give you a great hour-long, lecture on health insurance and how to. That doesn't exist. The system right now is not so good. So it's again the leading cause of bankruptcy, and part of it has to do too with it. Almost gets back to whatever, like the weather, where the current environment we're living in with the unhealthy nature of a lot of folks. I was watching an old TV show, and they just, or you go to Europe, for example. Every time I go to Europe, or even, South Central America, the people are, man, they're not putting the burden on their bodies that people in the States generally are. Some of these people are just, whatever. I see just people that are pretty unhealthy, and you don't necessarily see that in some of the other countries. So anyway, they all have their faults, but America tends to have extremes. We have people who absolutely don't drink, and then people are just complete alcoholics, and we have people who are, there is no God, and then we have people that are, we don't do moderation so much in the United States, whereas other countries tend to be closer to a mean there. But anyway, so that's one thing, obviously, that gets political once again, like everything does this type of season, the environment we live in. But if people are healthier, that's a great way to not only reduce costs, but, better their lives. So let's hope there's some progress made. So insurance companies and premiums. So these guys they're essentially bookies. They sit there and they make bets, and they go, man, the odds are that you're probably not going to wreck the car, so we're going to, put some money on one side of the bet. And it does get down to these people, especially in health insurance. They are making all sorts of calculations. There's somebody in a dark room somewhere has got a chart that basically says when you're going to die based upon your lifestyle factors and your genetic material. If they can get your DNA, man, that is very valuable. So that's one reason to protect your personal data, to include your your health data, because you might find yourself uninsurable just based upon some profile that they've generated based upon information they've gotten access to. But anyway, they're trying to make bets. They want to insure the people who absolutely aren't going to hurt themselves, and they really don't want to insure the people who are in serious trouble. Okay, so a couple roles. Yep. Fixing a vehicle for auto insurance, medical liability. Hopefully that didn't happen. Again, medical liability. Homes damaged by a fire, homeowners insurance. Injured while you're in your home. Oof, let's hope you weren't negligent. Medical bills. More medical bills for illness, disabled, and then die. And life insurance. Life insurance is a special case. And I'll make the argument, I'll tell you up front, that life insurance applies to a specific portion of your life. For the majority of your life, the smartest thing to do is not to have any life insurance. Now, that would be that portion of your life when you're from 0 to, just born to whenever you start having people dependent upon you. So in a traditional sense, probably, 25, 30 or something like that. If you do get married and you start having, a spouse and children, yeah, you're in the realm where you need life insurance. But you're also in the realm where you're saving money for retirement, right? You're starting to put money aside. Now, as you get older, let's say you're getting up around 50 or whatever, probably 60, maybe, let's hope you took out that 30-year mortgage when you were in your 30s, and you've got that house pretty much paid for. Let's say you had kids. Well, they kind of went to school or didn't. Anyway, that expense that you had to set money aside for, that's kind of gone. And now your insurance premiums would be getting considerably higher because you're getting considerably older, and you've got a nest egg built up in retirement. That life insurance was supposed to cover the cost when you're gone, make up for that difference in lifestyle. Well, hell, you're almost retired, and maybe that retirement's already built in for your surviving spouse if you happen to die. So the best thing to do would probably drop that insurance and not worry about it, and use all that money you would have spent on premiums to make further investments. If you want to leave money behind for your survivors, your beneficiaries, then do that through investments rather than life insurance type thing. So anyway, role of insurance agents, broke. They're on commission. Let's face it. I've got both a brother-in-law and now his nephew. They make a tremendous amount of money doing this stuff, and the sad thing is that my brother-in-law, he's been out of the insurance business for probably 15 years. He still gets money. He still gets, every time those people renew their policy because he originated it, he gets a check. That's where there's a lot of friction in this system. Anyway, but they're there to present complex policies to people, but yeah, they do not work for free, that is for sure. Yeah, there's sometimes the insurance agents that just work with one company, which, you still see, State Farm or Country or whatever, different companies that will have a particular person, but more common is where you go sort of on a supermarket type thing where you've got, you could even be buying it online from companies that might have a salesperson that represents multiple lines, which is actually probably the better model. So, the independent insurance agent, many different insurance companies. So, there may be a point where some policies, you do it without an agent. And I've done that for life insurance policies, which I'll go into later. And obviously for auto insurance, I don't have a person I call. I don't have a guy in insurance. I have had that situation, and actually it was worse. I'd rather have the sort of faceless corporation that I work with. Now again, you want to make sure that these companies are solvent, that they're not just taking your money and are not going to be able to pay. They have to be able to pay when the bad thing happens. So, just like for everything else in the financial realm, there are rating companies. Insurance, it's typically Standard, or AM Best. Standard & Poor's does financial type things. But AM Best is usually rates the insurance company. So a third party type thing. In mutual funds, we haven't talked about some of these things yet, but mutual funds are rated by Morningstar. Again, a company that's not, they don't have their own products. They rate other people's products, so they have some objectivity. All right. So this is probably the most common thing, most common claims people are filing. To tell you the truth, you have to have homeowners insurance if you have a policy, but man, filing a claim with those people, that's when I talk about having my own insurance person. I did up here. I was going with a certain company, and I had some damage from a roof situation, and I called them up, to file a claim. They said, well, yeah, you can do that. It was about $4,000 worth of damage, and they said, but if you do, we're going to up your rates by at least $4,000. So the smart thing to do, they weren't lying to me, but again, it kind of whatever made clear what the game was, and it kind of aggravated me. So I ended up going with a different company because I can figure that stuff out on myself. the personal touch wasn't helpful. Besides, they were creeping. They were out here. I've got a couple different properties, and one of which is actually in an area where they're probably going to extend the road, and it's going to get knocked down, which I'm all about. I don't like this old house, and if they knock it down, eminent domain, where the state or the government comes in and condemns your house and knocks it down. Because they want to extend the road or whatever, not because it's derelict. Although this one, it's a fine line. It's getting that way. So anyway, the insurance company was kind of sharing my opinion that it's looking a little ratty, and they're like, "Well, are you going to fix this? Or are you going to fix that?" No. So anyway, I'd rather have the insurance company in Texas who they just know my thing from Google Earth, and they can't see needs paint or whatever. So why is auto insurance company or auto insurance so high? Personal injury, that's, you see the advertisements, you see the billboards. It's I have some friends who I met. I was looking for an attorney for a different need, and they were really excited to work with me because they were so bored, but they made so much money doing the personal injury thing, and they gave me some advice because I was talking about perhaps serving alcohol at one of my business venture type things, and they're like, "Yeah, don't do it. We will. Somebody will get hurt, and regardless of what you do, our client will sue you." And the way they described it was it's like a kind of Alaska example. Somebody's driving down the road. They've got a passenger with them. They hit a moose. Unavoidable. Moose just jumps out, hurts or kills the passenger. Somebody's going to pay for that. The moose, not a good option. No insurance. Did they do anything? Were they in the lane? Were they driving the speed limit? Did they take all appropriate care? In this case, yes. But guess what? Somebody's got to pay for that passenger. So they'll sue the driver and come up with some whatever, because the judge, the courts, they want to see that injured person taken care of, and oh, by the way, these guys, that injured person's going to get a portion. The attorney's going to get a ton of money. So if you can limit and make personal injury claims less profitable, perhaps less incentive for the attorneys, maybe that's a step in the right direction. But anyway, that's, again, bigger than personal finance, but the reason why you may be paying more for auto insurance than you think, well, also the vehicles too, especially some of the electric vehicles now, where damage to the battery, although small, can end up in a total replacement, and we're talking tens and tens of thousands of dollars. So you have options though in auto insurance in terms of the amount of coverage you want to hold. So we know it's between you and the insurance company. It's a contract you sign, specified coverage. So it can be a lot or a little. I mean, the liability part, there's going to be a minimum, but for the rest of this, those numbers can change. So, there's 3 different numbers that are quoted that I'll show you, and they talk about property damage, bodily damage, and then total damage. So things like this, I never got charged for it. I smacked a car into a guardrail and took out a fair amount of guardrail, and theoretically, the state of Alaska should have sent me a bill for guardrail. And if I would have been, drunk or done something, if it would have gone further, they probably would have done it. But they were aware of the guardrail that I took out. It was just an icy road, and I bought a stupid. I don't know what I was thinking, but I bought I was actually looking for a 4Runner, but I came across another Corvette that was super cheap. And Corvettes, especially it wasn't a winter's day, but it was a fall day, and there was frost on the road. And yeah. Anyway, I was able to drive the thing home. It wasn't much of a vehicle at that point. But anyway, it just happened right around the corner. And probably took out a couple, 3 sections of guardrail, and if you start paying for that can be pretty expensive. So bodily injury, that's obviously somebody getting hurt, and then the vehicles, and then whatever infrastructure gets damaged. So this is how they quote these numbers. So the per person injury, the total for all people, and then the property damage. So you can see how these numbers, you all have probably priced vehicles and or know a little about healthcare. You can exceed these numbers in a hurry. But the law has to set certain minimums. So you can go over and above those numbers. Now keep in mind that, again, getting back to the personal injury lawyers, especially if you're doing something negligent, man, they'll zoom right through these limits and they'll come right after your personal assets. So, and then the coverage. Another thing that we don't often get into. Okay, so different states, and there's no rationality. You'd think California being over the top with rules, but $5,000, I mean, that's nothing. So most people will exceed these limits just based upon their own purchase when they're buying the vehicle. I guess I should have showed Alaska. Yeah, so Alaska's kind of in the middle, maybe a little on the high side. Okay, uninsured motorist. Yep. Again, something you want to have. Go figure. There's not a lot of penalties. I live in an area where I tend to, I don't know, 1 or 2 cars a year end up in my yard, but my yard's pretty extensive. They end up in the fence line, knocking trees down, and this guy, I mean, wow, he definitely had the troopers on his side. A guy crashed a truck, flipped it over, but the good thing was he wasn't driving. He had an imaginary friend who was driving, who left the scene of the accident. I wasn't there. I was actually out of the country, but I had some people work for me who talked to the troopers and all that. And yeah, this guy, his imaginary friend, crashed the vehicle and then ran off, and so left this drunken guy behind with the broken vehicle. He was driving, his friend's vehicle, and it was all shady. Anyway, they had no insurance, and I went through DMV, and I wasn't. I guess legally I'm the victim here, but I wasn't much of a victim. I mean, they knocked down some trees and some fence, but I had to pay $10 just to get the trooper's report, and I never ever got it even come out, and it just, they had other stuff going on, so kind of disappointing. But if you the number of people out there without insurance is probably higher than you think. You don't see a lot of enforcement, and it was just, I went in there with this revelation. Oh, well, this guy didn't even have insurance. Yeah, so what? The troopers didn't care. DMV didn't care. Nobody cared. They didn't take his license or anything like that. They just said, yeah, he ruined his truck. I guess that's enough of a penalty. I don't know. Collision. So this is one of these optional things. So let's say, and this was what I was talking about a couple lectures ago, in terms of, and I'm not recommending this by any stretch, but if you've got a vehicle that's just too high to insure, you can opt to go without collision. Or the more common thing and the more reasonable approach to collision is, let's say you've got an older vehicle, like I've got some older pickup trucks, and if I want to pay, say, $500-600 a month extra, or not a month, a year extra, I could have collision, meaning that if I'm in an accident and it's my fault, my vehicle would get fixed, even though I was the one at fault. That's the nature of collision. So if an accident happens, you always have to have, legally, you're always responsible to have liability insurance. You're always responsible to have to fix the other person's vehicle. But if you opt not to take collision, you can not have coverage for your own vehicle if you're at fault. Now, if the other person's at fault, you're going after their insurance, so your vehicle could get fixed. And this brings us to another thing. When an accident happens, make sure everybody's safe and all that standard stuff. Obviously, get the law enforcement people there if it's going to be some contentious thing. But don't start talking about who caused what or what happened. It could damage you very much later in court. And if you think it is going to be contentious, you do want law enforcement to come out there and sort of document what happened. Maybe a few pictures even from your own personal phone if all of a sudden the story starts being changed to put you at fault when you weren't at fault. But anyway, discussions of fault between you and the other participant in this accident, don't do that. Comprehensive is the other parts. That's sort of the cats and dogs. Flood, fire, theft, riots, everything else, you know. Now, this stuff gets kind of interesting, especially when your vehicle's, like, say, in the garage and, you know, something happens. Is it the homeowner's policy? Is it the other policy? It's kind of crazy. You know, and the way insurance companies work, it's kind of odd. I mean, not a common occurrence for most people, but I had a pig out in the road a couple of years ago, and that old boy it was actually a girl, Petunia, got hit by a vehicle. She was in fact, I'm still eating that pig. It's creepy as it sounds, but yeah, she took a Bronco to the head, and it took her out, and obviously this person with the Bronco or there's Explorer, whatever, they were a bit upset. I never met them, but they filed a claim against their insurance company, and my insurance company actually paid for it through the homeowner's policy. So I didn't care. I mean, whatever, and they didn't up my rates because it was kind of an extreme thing to say that, you know, the pig was at fault because we had no other issues. Anyway, he was outside the fence. I got fined $300, and anyway, curious. Deductible. Another way you can sort of change the amount you're going to pay for your insurance. And again, everything seems like sort of a gambling kind of sketchy thing here, but you know, you're making a bet. For example, I used to drive, as I said, fairly nice sports cars in Europe, and so I went with $1,000 deductible, which was pretty damn high. I mean, this was a few years ago, and I went with the highest deductible available because it lowered my rates. Now, if you go with like a $200 deductible or something very low, your rates are going to be higher to the point of maybe even being doubled. In my mind, I'm like, nope. If I file a claim, it's going to be something serious. Otherwise, you know, I'll not deal with it. So, adjusting your deductible higher, but keep in mind that, you know, the point of insurance is to have these things happen and not have a huge financial impact. For some of y'all, $1,000 deductible might be, you know, sort of a big life event. And frankly, on some of the healthcare issues, the deductibles, the copays are that much, so it can get kind of scary. But a deductible just means that the amount that, you know, if there's $11,000 worth of damage to the vehicle, the insurance company is going to cut a check for $10,000, and you have to come up with the extra $1,000. Expenses incurred by auto insurance companies, lawyers' fees, yep, all that stuff. So collision, damage to your own car, medical, bodily injury, property damage, comprehensive. What changes this? Yeah, characteristics of the car. But also this sort of reflects, you know, sports car type things. People that are, you know, the certain cars attract a certain demographic. And so, you know, case in point was that Viper. You know, the majority of the people were idiots who drove those vehicles. I mean, they were, you know, people who had some midlife, you know, gold chain wearing guys. I actually, I got a free trip to the Ferrari factory down in Maranello, down in Italy, from the Ferrari dealer in Saarbrücken. He said I was the only Ferrari. I mean, showed up in a Ferrari. I was with my friend's Ferrari, but I was the only person he ever met who drove a Viper on a semi-daily basis who hadn't, you know, been in an accident. totaled it out. And so, whatever, he had to go down there anyway, and I guess he gets a certain number of trips. So it was kind of cool to go down with a German guy to the Ferrari factory. But anyway, the insurance, again, it was going to be $18,000 a year for that vehicle. I mean, it was just like, would I even have bought the car if I knew it was going to be that much? Anyway, I chose not to pay it. I paid, I don't know, $1,100 or something like that, because all of that extra money was for the collision. And I did actually spin the car one time. I had super old tires, which is a different story. Make sure, just because, as you probably know in Alaska, or you may learn, that there's different components to tires. The one component is the tread, which is quite obvious, but also the age. And this Viper only had 12,000 miles on it, but it was dated from 1994, and those tires were just hard as a rock. And anyway, it was an unfortunate thing, and it's manual. I slipped off the clutch and came back on it, and tons of torque. It was whatever. It had a V10, V12, huge motor, no anti-lock brakes, no traction control, none of that on a Viper, and I would spin it off and didn't hit anything, just backed out and drove off. But anyway, your personal characteristics. So again, ties back into it, and again, if you're male versus female, again, males tend to. It's the whole thing about moderation and averages and the rest of that. The reason why there's probably more male CEOs in the world is probably the same reason there's more males in prison. I mean, people tend to be in extremes, and so the insurance companies are trying to protect against that. So, yeah, males are generally going to pay more insurance. Young, yeah, less experienced, a little wilder, more mileage, more opportunity for that wreck, and then obviously, a couple Deweys or something like that, it's going to make you maybe even uninsurable. Location. I'm surprised that Alaska rates aren't higher. I've slid more cars off the road up here than I have in the rest of my life. But anyway, driver's training. That's kind of a good thing. Sometimes you get your speeding ticket or whatever, and in certain states you opt to go to driver's training, and like it's going to make a huge difference. Whatever. Sit there and endure it and get out of the ticket. School performance. Also kind of indicative of the rest of your character, perhaps. At least they judge so. I mean, these people have formulas to calculate, propensity to do stupid things, and they're going to set the rates accordingly. Your insurance company, yep. And it's not what you'd think, Some of the big insurance companies that you would think would be the cheapest are actually kind of high, I don't know. Every time I see that Geico airplane or some of those other things, somebody's paying for that. That's got to be covered. Maybe they do enough business, but I've never found good deals with some of those insurance companies that tend to offer the lowest rates. I've always been with more obscure companies, but compare prices. So, yeah. New York high, probably more, New York, California, more lawyers, more things like that going on. The quality of drivers, the driving conditions. Not so in homeowners insurance, you'll see more like natural hazards like, hail and tornado alley type things where you tend to have a lot of vehicles damaged. They might end up with higher rates. So homeowners insurance, a necessity. Again, probably the insurance that you're least likely to utilize. It's not horrendously expensive typically. They have the different perils. So you have perils and hazards and risks, and they all mean, a certain thing. You want, anytime you're looking at an insurance policy, You don't want a cancer life insurance policy. That's fairly ridiculous. Although it's good marketing. This person needs to die of cancer before we have to pay off. That's good for the company, not good for you as a client. You want all perils. You don't care how the house got destroyed. You just want the house restored. So a lot of this, especially like fire, the majority of the damage from a fire is not from the fire. It's from the water and the smoke and everything else. And so you start quibbling over, well, we don't cover against that smoke damage, but we cover against the fire. You don't want to go down that road. You want all perils. And while we're talking this, you want replacement cost, not market value type costs. Meaning that, if the TV gets destroyed, you don't want them saying, oh, that TV, it's an older model, whatever, it's halfway through its life, it's worth $200. When to replace it's going to cost you, I don't know, $700, $800. TVs probably aren't a good example because they tend to go down in price, but clothes are a great example because, your clothes, if you're going thrift store value, they're worth almost nothing. But if you have to replace them, it's going to be expensive. So property damage, cash value. So they're not calling it the market value; they're calling it cash value. Fair enough, and the replacement cost. But this depreciation, again, it's more work for them trying to determine the depreciation. But they're willing to do that work because it's going to result in them not paying you very much at all. Homeowners insurance, yeah. If you have some outbuildings and stuff, I specifically split up my property because I've got a building, a shop that's pretty useful. It's got a nice slab and stuff, but the construction on it's garbage. And if an insurance company came out, they would not want to insure it. So they'd want to just tube the whole the whole property insurance based upon that. So I put a lot line in between my house and this basically garage structure to prevent that from happening. And this one insurance company was creeping on the thing, and they were looking at satellite video, and they said, you've got this structure that you didn't tell us about. We see this extra building, and we need to come out and look. And I said, nope, that's on a different lot. That's none of your business. And so, sure enough, they verified, and they stayed out of it. But I'd like to have insurance on it, but yeah, it's a failing structure. It's got some issues. I've strengthened it up, but it works for my purposes, but certainly not going to be insured by anybody. The home inventory. So what happens is, number one, you need to know what was in the home. Let's say this worst case scenario where there's a fire and everything's destroyed. So this is kind of useful to have a list, a video, or whatever of what was in the home. So you can establish, what you had and then try to establish values for it. The other thing with this is when you're getting homeowners insurance, you need to let them know if you have something in a particular category that's worth a lot of money. Let's say you have a whole bunch of photography equipment or a huge gun collection or something like that, and you're thinking, it's all insured because I took out my homeowner's policy. Well, if you read the fine print, you're probably going to see that there's different categories, and it'll say something about, antique weapons or weapons insured to a total value of, $1,000 or something like that. There'll typically be limits on any one category. So if you have something, a bunch of jewelry or something like that that's of huge value, you need to make sure that that's delineated in the policy. And so they'll call that a rider, maybe it's an addendum, a floater, whatever the legal term they want to use for it. They all kind of mean the same thing, but don't think you're getting one over on the insurance company, because when it comes to actually replacing your items, you may be in a bad spot. So make sure that that's noted if you have some inventory. So talk to your agent in this case or whoever's issuing the policy. Yep, replacement cost, generally pretty useful. Here they're calling it a floater. Home office. Again, you don't want to get in these battles, but they'll say, oh, you're using this as a home office. Do you have business insurance? So, again, you know, it may help to have your policies with the same company. I remember in this case, I did have the policy with State Farm, and they sent me this nasty letter talking about this lady whose, you know, life was disrupted by, you know, her hitting my pig, and they were, I don't know what they were going to do, but it was a fairly nasty letter. And it was from State Farm of Arizona or something, wherever this lady had the policy. Well, I sent it to my State Farm of Alaska thing, and all of a sudden they sort of lost interest. They realized, oh, you know, this isn't a victimless crime. We're essentially going to try and extract all this money out of State Farm, but we are State Farm, so they lost interest in pursuing it any more than just the property damage to the vehicle. So if you had your business insurance and your property insurance, they're probably not going to fight over which policy is responsible. They're going to realize it's their responsibility and they take care of it. So liability as it always was. There can be other provisions too, you know, additional living expenses, loss of use of provisions. There's a lot of insurance policies that, this gets away from homeowners insurance, but when I was in Europe, you know, I skied quite a bit, and man, I had an insurance policy through the ADAC, which was the German, basically, auto club. But if I got hurt on a slope, they would literally, the main reason I wanted it was for the helicopter type service, because if you get messed up, just the same as in Alaska, you know, they're going to fly you out via helicopter, and it's all great until you get the bill. It's going to be quite expensive. So if you're going to be out there doing something remotely in Alaska or wherever, you may want that same sort of policy. But this German policy, man, it paid for me to get me off the hill, paid to get my vehicle back home in case I wasn't able to drive, paid to board my pet, paid, I mean, it just was extensive. It was pretty good. And back down that, you know, if you're going to be doing semi-extreme things in Alaska, I was with a buddy. We crashed a Piper Cub out in the middle of, not nowhere. We were going to hike ourselves out, but we were both in good shape. The plane was, you know, trash, total. But, yeah, we were kind of concerned that if they sent a helicopter for us, we were going to get stuck with the bill. So we were more than happy to I think it was about 14 miles we're going to have to walk. But anyway, we're getting set to do that, and an Air National Guard helicopter came out and picked us up and got us back home. So anyway, I do know other people who this one guy, the horror story that kind of stuck in my mind was somebody who was in a car wreck, and they genuinely needed to get evacuated, and so it was on the road system on the Old Glen, and so they sent both a helicopter and an ambulance, and the ambulance actually picked him up and got him to the hospital. But because they dispatched the helicopter, even though they never used it, they still got a $28,000 bill for that helicopter. So, yeah, you can be incurring expenses that you didn't consider. Factors in homeowners insurance: value of the home, deductible, location, degree of protection, discounts. So if you go to get homeowners insurance, they're going to ask you all sorts of questions, and some they'll just derive on their own. You know, they'll see how far you are from the nearest fire station. They'll see if there's, you know, hydrants in the area. They'll see, you know, they may come out if you live in some wildfire situation. They'd look at the brush. They'd look at, you know, the location to rivers and other things that might cause some sort of damage. And then they'll ask you the usual things about burglar alarms, you know, smoke alarms, all the rest of it, and discounts due to maybe a lack of filing claims. If you're somebody who's filing claims all the time, yeah, they keep track of that, and they will raise your rents. So again, Oklahoma, boom. This is primarily due to tornadoes. I'm not super tall, right? You'd have to be exceedingly tall to notice. I've got a horse trailer, super nice. It's like a $40,000 horse trailer that's hail damaged. I guess the roof of it's all dented up from a severe hailstorm. I've never seen it to this day. You know, the horses don't notice. I don't notice because it's all all the damage was sustained on the top of the trailer. It doesn't leak or anything, but it's a nice big, horse trailer with living quarters. It's got a microwave, a shower, the whole bit. But I bought it. It wasn't Oklahoma. It was actually North Texas. And anyway, but hail damage, yeah, I can destroy things in a hurry. Is the trailer ever going to be completely right? No, it's not economically feasible, but it does perfect as a trailer. So anyway, the insurance company though settled out on that claim, and then I just bought an insurance auction. So, homeowners insurance strategies: increase your deductible, as you can do with everything. Improve the protection. Sometimes they have multiple policy discounts. Again, look at the different things. You got to compare cost. Stay with the same insurance company. This sounds like it's written by an insurance agent where they want to, these are kind of their typical pitches. Shop around, find out if that is indeed the case. Renter's insurance, typically, it's pretty affordable. All you're insuring is just your own items within the home, usually some limited liability protection, which is why the tenant, or the not the tenant, but the landlord may insist upon it. Specifies maximum coverage for personal assets and liability. Umbrella, that's a good term. Umbrella means it covers everything. That's what you want. Again, having like $1 million personal liability floater is a comforting thing, meaning that if some knucklehead happens to come on my property for whatever reasons and somehow happens to hurt himself for whatever means, it's basically not my fault. I mean, I find people out there trying to get chog off the trees or picking mushrooms, and they're out there on ladders trying to do silly stuff, and if they happen to hurt themselves, probably get a lawyer, and they'll probably, try to establish. Anyway, not having to worry about that is a comforting thing, and having that, as opposed to a specific peril, having the umbrella policy is quite nice. And you don't have to be that wealthy. You just have to want to try to maintain the wealth you have. So, health and disability insurance. Very much, goes back to what I was talking about with insurance. The concept of insurance is that something bad might happen. It's only going to happen to an isolated number of people, and so if everybody contributes to a pool, then when that one bad thing happens to that one individual, it's covered by the rest of the pool. Well, that all sort of breaks down with health insurance. We get into pre-existing conditions. You have one group of people who's going to have a tremendous amount of claims, and other people who are not going to have any issues. And the people that are super healthy and with zero issues, they don't necessarily want to pay. That was one of the problems with it's called the Affordable Care Act officially, but it's also called Obamacare. And part of the concept of that plan was, we're going to force everybody to get insurance. And the young people, who don't have any health issues, they're still going to have to pay a premium at a fairly high rate. And we're going to use that money to subsidize, the people that are older that have extreme health issues. And, that just doesn't kind of work, because the younger people are, number one, they don't have the money to pay those high things, or they don't want to pay those things, or they end up not having the funds at all and have to get insurance for themselves just for coverage. So it just sort of breaks down. And then you get into pre-existing conditions. Imagine you had a pre-existing condition with a vehicle. You say, I want to insure my Camaro. And they said, okay, well, we need, pictures to insure the Camaro's, all squared away. Oh, no, it's already totaled out. I wrecked it a few days ago, but I want to get insurance for it now. If they're like, no, that car's damaged. You can't insure, you're insuring the likelihood of risk when there's no gamble here. That vehicle is damaged. So this gets to be a very cruel discussion when you're talking about people in healthcare, that, somebody with pre-existing conditions, you don't go to the insurance agent and say, I need to get insurance for my for my home that burnt down last week. They won't do it. And so people need health coverage, but is it done through an insurance model? Probably not. It's more of a welfare model or some other model. And then disability insurance, we'll talk about it. So the good news about health insurance is most people get it through their employer. So, this is that Affordable Care Act, only a small portion. So we have the employer, you get it through your employer. It's a larger pool, makes more sense. Medicare, you're elderly, what is it, 65, I believe. Medicaid, this is basically welfare. Medicaid, children under those policies. So again, quite a high number, 22% or so. The Affordable Care Act, that was the Obamacare type thing. Premiums are a little higher than they want to be. Other things, and then they'll point to this and they'll go, "Oh, there's uninsured. This is horrible. Nearly 10% of the people have no insurance at all." Is it? Sometimes people are in transition, or sometimes people, in the case of healthcare, they may say, "No, I don't want medical insurance. I'm going to be self-insured." And if you're a wealthy person, it actually kind of makes sense to do that. If you need some sort of surgery and you go to the doctor and you say, "I'm paying out of pocket," all of a sudden those exorbitant healthcare costs become down in the more reasonable level, because they know they're going to get the money, and they're going to get it without a lot of drama. A medical procedure from a hospital that costs $100,000. Well, yeah, it's probably a $25,000 procedure, but they've got to build in all this extra overhead because Medicaid's not going to, pay back. They're not going to reimburse for the whole amount. They're going to give a percentage. And oh, by the way, all the paperwork and administration to get that money out of Medicare, that's going to cost a lot of money. If you walk in there and you cut them a check for $25,000, they're going to end up in better shape than charging Medicare $100,000. So anyway, I'm not saying there aren't uninsured out there, but I'm saying for some it's actually a conscious and a reasonable decision. Private insurance companies, the government also, so critical component. So this can't be overstated that this will devastate people. So having coverage is definitely something you need, but as it kind of goes from an insurance model to a welfare model, getting the government and things squared away is perhaps more important. This is kind of interesting. The fact that, if you look at the results, the outcomes during COVID, yeah, we were doing worse than, sub-Saharan Africa. So for the amount of money we spend and what we actually get, there's a breakdown. And you can see that roughly Europeans spend about half what we do on healthcare. But another interesting fact is that they spend about twice as much on food. You don't necessarily see them eating just garbage, and they tend to be a little not carrying around as much extra weight. Perhaps that's related to the food, and in some cases a little less stress. Again, I'm not trying to be anti-American. In fact, I'm not. But America, the United States in particular, is very, again, we don't do moderation. We do extremes. You're either a health fanatic or you're, a sloth on the couch. So perhaps a little moderation would help and get these numbers down. But, they're going to make America healthy again, so I think most people should be behind that effort. Drug companies, probably not so much. Cost of health insurance. So 1 in 5 is uninsured. So they're going to make the pitch for Obamacare. Again, I need to change up the slides a little bit. The author is getting a little dated here because they're trying to push how how the Affordable Care Act was going to be the savior. No. Big health, big pharma was not going to allow that to necessarily happen. So pre-existing conditions, we've talked about that. And unfortunately, a lot of this can be identified, through your genetic profile. Rehabilitation, mental health coverage, all very important things. I could have. They wanted to work on my shoulder this last summer, and it took a lot. And again, PT was not free, but in the long run, I think I did better by working through it. May need to get surgery at some point, but and then mental health, obviously, a lot of you look at people in the streets. Is that a homeless crisis, mental health crisis, a drug crisis? A lot of factors leading into that, but our mental health system is not up to speed. Pregnancy, yep, we do want a population that's going to continue. We do want to, regardless of your politics, supporting women in pregnancy is quite important. Dental insurance, again. Now, vision is kind of cool because it does sort of present the model for what could be in terms of a private insurance model. You can get a lot done for a very affordable price in the realm of vision care because there's a good insurance model and there's a super competitive marketplace. So, not that you would do laser eye surgery on your on your foot or something like that. But if that level of technology, that level of preciseness in care, if that were applied to other realms of insurance, it would be prohibitively expensive. But in vision, they can do some of this corrective surgery that would be astronomically expensive. But because they use a sort of free market model, they're able to get that down to quite affordable rates where people largely do it without insurance. So, could be interesting. Determinants of unreimbursed medical expenses. So, again, always, deductible co-insurance. So, if you have two different insurance companies, I had this at one point. I was working for an employer who had insurance, and then I still had my military coverage. And between the two, all they did was fight and not want to pay. I had to cancel the one. You may see the same situation if you've got a spouse with insurance. And you think, oh, it's great, we'll have double the insurance coverage. Not the way the insurance companies see it. It's far easier just to have one good policy and not have to list a second one because that primary one's never going to want to pay. They're always going to want the secondary, and likewise stop loss provision in case things payments not given, coverage limits, and coordination of benefits. So anyway, a lot of drama that can occur in healthcare, and I wish there were better answers to be provided, but there aren't. Expenses not covered, flexible. So you have medical savings accounts. You have some of these other accounts. I've never owned one, but they're definitely out there. If you're going to be saving up for potential healthcare expenses, check into it. Those plans are available. Medicare, so the people over 65. You guys are so far out from this. I'm not going to spend a lot deal on it, but yeah, generally people of Medicare age vote, so pretty good policies, a lot of health needs. You can really swing people, so they're probably pretty well taken care of. Medigap, so little insurance companies that they'll all identify things and they'll market them extensively. Medicare Prescription Act, sure. Again, now Medicaid, this is where, or needy families with dependent children. So, federal program administered by the states. Affordable Care Act. So anyway, this was all, done under the insurance model when it really wasn't an insurance model. It couldn't pay for itself. The people who were involved in are paying those premiums. They're pretty high. The $6,500 deductibles and things like that, or just the premiums themselves represent such a significant portion of people's income, and yeah, it can be quite expensive. Long-term care, nursing homes. They're saying nursing homes cost approximately like $100,000 a year now. A lot of people, have to mortgage their home to pay for that. Premiums can be extremely expensive. The sad thing is that when somebody's committed to a nursing home, this came up during COVID, that they said, over 50% of the people in nursing homes were passing away. Well, the sad news is that that's about the normal numbers. If you're in a nursing home, your odds of being dead within 6 months are about 50%. So anyway, they don't discuss it in here, but I've told you my plan. I'm not staying. I'll go to a different economy, a different place, probably Central America at this point. Live a great life with assisted care and call it a day, rather than pay premiums to a company. I actually had, with my previous employer, I had some of this extended care type thing because I was going to have an operation. I was been down for about 6 months, and I tried to collect even for that 6 weeks, and found out that they weren't going to pay. It was kind of a scam. Legal. They weren't charging much in the way of premiums, but they were delivering virtually nothing in terms of benefits. So, long-term care provisions. Yeah, if you start earlier, that you make that decision, maybe based upon your family history. You say there might be a chance I'm going to be in this situation. If you start paying when you're younger, but if you wait till you're almost in need of that care, it's going to be incredibly expensive. Factors that affect provisions, health condition. So if you've already developed the health condition, that is going to make it much more expensive. And shopping around. Consider your family's health situation and your financial situation. For me, it's pretty much, you don't want to, again, it's a very personal decision, but for most people, you don't want to become a burden to your younger family. Now, there are some good programs, like I know, I was talking to a friend of mine, and I asked them what they did for work, and their main gig was as a long-term health provider for their parent. And they're reimbursed to a certain extent by the state, because the state was going to have to pay for that care anyway. And so if they can get a person to do it, that makes better sense. Disability insurance. So this is typically refers to, when you're at work, something like that. Let's say you're a roofer, you fall off the roof. If you have a disability insurance, now this definitely makes a difference whether it happened on the work site or not. Generally, you want it to happen on the work site if something bad's going to happen. But let's say you're the roofer and your ankle is jacked up. You'll never climb another ladder again. If you have own occupation, then you're going to be collecting on that policy. But if it's any occupation, they say, well, you can't do roofing anymore, but you can sit in a cubicle at a keyboard and do that all day. So, no, we're not paying. So that's what they're talking about there. Disability insurance. So, you can't have private disability insurance the employer normally has a better plan, and then Social Security and workman's compensation. You do pay into this in terms of withholdings. So again, it's an insurance concept where, although it's a government program, you're paying into it. And again, it's based upon numbers. Everybody pays into it, and only a small number of people collect. Therefore, it's viable. A lot of times with insurance programs, there will be a certain period of time. What they're trying to do is find, somebody who doesn't have, oh, my wrist is locking up. I've got some severe carpal tunnel thing. I'm not going to be able to do this. I better get some insurance quick. Well, that's a pre-existing condition that you didn't report. And so they're not going to want to start paying on that immediately. They would maybe have some sort of waiver, or not waiver, probationary period to exclude those people. Yeah. And again, non-cancelable. Obviously, you don't want your policy to be cancelable. You'd like it to be renewable, preferably at the same rate. And doing this. So, anyway, most of the time it's provided through your employer. And that's why documenting the injury, the employer is usually over the top in insisting that any workplace injuries be documented so that, it can be appropriately settled. So we're not talking about health insurance tonight. I thought we were going that direction, but no, we've already done enough. We're going to talk more about the test, but I'm going to come out and do the test review, on a separate lecture. Yeah. So hopefully, I'm not saying big things are going to happen, but maybe over the course of the next couple of years, there will be some improvements to the healthcare thing. It's kind of frustrating to talk about, something as depressing as healthcare insurance, but just keep in mind, when you're listening to these decisions, what's good for society and what's a viable business model, and sometimes trying to get the private sector to insure against things that aren't insurance at all is it's not going to be a viable model, therefore not going to be a long-term solution. But anyway, that's about it for now. We'll talk more about the midterm in the next lecture.